Patrick Grimes joins me here today. You could learn what his team is up to. Head over to investwithpatrick.com. Stay to the end because Patrick will even give you a book, but we won't give you that URL until towards the end. I really appreciate your time here today, Patrick.
Yeah, glad to be here. It's going to be a fun podcast and honored to be on.
I appreciate you. It has been one of those things that it's just kind of proof positive that persistent, consistent behavior, just start to get into the habit of things.
I get asked to be on podcasts a lot. Sometimes I'm Googling it. Is this actually a podcast? Do they actually exist? And there's somebody like you reach out and I'm like, 100%, let's do it.
Before we get into that, I was hoping you could take just a couple minutes and tell us how you found your way into this because you really have a focus on passive investing. And I think that's where a lot of people try to get to. We're trying to find that financial freedom. But in the end, what we're really trying to do is free up our time for other things.
Yeah, I think that really kind of hits it on the head. When I was I was like many of your listeners, like a high paid professional. I got a mechanical engineering degree and I actually loved it. I've always been a little bit of an engineer just by personality, tinkering with stuff, taking things apart, inventing little gizmos and gadgets. But then when I got into a real job and I saw myself, okay, now I'm launching into a career and I was doing well, I wanted to learn how to invest, what to do. And I didn't come from wealth. It was fairly modest upbringing. And so while we were in this, we were doing automation robotics for medical device. We did throughout my career. It's been solar cells, defense, all kinds of, random, really cool stuff. Google, Facebook, Lockheed, SpaceX, all kinds of stuff. And a lot of those people there are just really smart, some of the smartest people. And I asked the founder of my first machine design firm, hey, where are you investing? Because I'm starting to make some money. I want to know where to go. I'm pretty sure you have the inside track on where to go and what to do. You guys ran a really successful firm for like 3 decades. It's like and he seems to be very wealthy. Well, surprise, surprise, he dumped everything in alternatives. He said, make your money in high tech, invest it elsewhere. And that was fascinating to me. I think he understood by that point in his career and his life that you can't be all in one industry. And while you can be doing very well in one, it doesn't really provide financial security because, each market, whether it's high tech or healthcare or whatever it is, they have their ups and downs, and you need to be in multiple different allocations, whether you're working in one and investing in 1, 2, or 3 others. And so that's what launched me into kind of the alternative space and getting out of the stock market, and getting into other kinds of investments.
Well, can you expand upon that a little bit? What do you mean by the alternative space? Because when it comes to the stock market, we keep being told you got to diversify, diversify, diversify. You're buying all of these different stocks, but you're talking about something very different from that.
Well, the stock market is not like stock markets. It's singular. It's one sentiment driven feeling about how things are trading. And so that market is going to rise and fall based on how people feel. The interesting thing about that is it's a pretty big wild ride. And it never was meant to be this type of investment. Yeah, I know we've got a little two-year-old.
My daughter just turned 19.
Yeah. So the stock market is just that. It's a market and it's not the end all. It never was really meant to be that. And people started, and the government propped up 401ks to try and get people very interested in investing in the stock market after the Great Depression again. It was never really meant to be the end all or be all, but, one investment. And so unfortunately, kind of the way things progressed was we have these employer sponsored 401ks and these custodians of those that kind of make that your end game. Unfortunately, it's not going to work out for you. Why? Because the stock market goes for a ride. It's highs and lows. And we've seen that happen, in fact. So when we say alternatives, what I mean is kind of that alternative concept where, what we're told by our employers, custodians, or the financial advisors and planners, which they only make money off other investments in the stock market. Even if it's a REIT, I write emails and Forbes and articles on the rules of REITs because that still tracks with the sentiment driven market, even though it may be supposedly real estate, it's paper version of real estate and how people feel about that company buying real estate. And so the alternatives are everything outside of that. And from a broad sense, it's things that aren't driven by the same market fundamentals as the stock market. I look at real estate as an example of an alternative, right? It's an essential need. People are investing in it, and it tends to ride different ebbs and flows, different market cycles. Oil and gas is an alternative. Investments that are alternative tend to be recession resilient, and alternatives are investments in healthcare. They tend to not be as the ebbs and flows as wild ride as because people constantly need healthcare in recessions or not, or education or the legal services, right? That's another example. Just like CPAs, plumbers, and HVAC, they're needed even in downturns. And so not only do they have correlation to their non-correlation to any other broader investments in your portfolio, but they show resilience to downturns. And so when you say alternatives, it's that journey to step outside of kind of the de facto play that we're raised with. It's difficult because it's kind of locked into there by your parents and your coworkers, playing in the stocks and company 401ks or IRAs. But you got to step out. The further you reach, the more secure your future will be because you'll be on better footing with uncorrelated pillars of investments that won't ride the same roller coasters together.
It's interesting that you're painting the picture the way you are around it being kind of a feeling regarding some of these, but I can't refute any of that. But could you introduce everybody to this other concept? Because you mentioned before we hit record litigation investments. What's that?
Well, so anytime you decide, like, okay, I've got my pie chart, and any of our slide decks, we educate on non-correlated alternatives, and you kind of put like, I got this sliver in this real estate, bonds, income. I got this sliver in, whatever, oil and gas. And you kind of look at that and say, okay, here's all my wealth and here's in cash. So what markets can drive what these pieces to be volatile? And what most people will find is that they're almost entirely in stock market. And then you think, well, it's a huge, huge risk, or they maybe got a rental home. Well, that can ebbs and flow. I lost everything in 2009 and 10 because I was all in real estate during the subprime mortgage collapse. That happens. A lot of commercial investors, we had the 2009 and 10 of commercial real estate just happened for the last couple of years. They lost it all. So if you look at this pie chart, you say, look, I would feel a lot better if I added a piece, maybe a sliver or, a piece of pie here that was not governed by the same market fundamentals, but driven by the same factors as my other pieces in the chart. And so when you identify that's the case, and you're like, okay, well, I got to go out and learn about something new, you're going to be very intentional about what that next thing is. And most people start with real estate. It's kind of like the gateway drug. They can do it with their own money. I did it. It's my own money. I lost everything because I wasn't experienced. And I did it again with my own money, a little bit smarter. Then I started trading up and partnering. But then I realized, man, now I am in the stock market, just real estate. So what's the next step? I look at my favorite ones are ones that represent recession resilience, as I said, as well as non-correlation, aren't driven by the rest. And the one that really sticks out to me is the legal industry. Why? Because it's a very simple industry. It's not like you're building an airline where you've got tier 1, tier 2, 3 suppliers, you got tens of thousands of parts, and you've got all these processes, and it's people doing a service. Not dissimilar to being a CPA or an HVAC. You've got certain number, you got hourly rates, you've got court fees, filing fees, and you've got rent, and you've got a service you're providing. But you got to think of like, how do you access that? You find a great industry that's just steady growth, doesn't care about oil and gas, doesn't care about gold, doesn't care about interest rates, doesn't care about the stock market, just keeps growing. How do you access it? Well, then you got to go ask those guys like, hey, how can I invest into your space or I create value for you, right? Where I can participate in your industry and the fundamentals. And happens to be that just like in real estate, where you can lend to operators who are buying properties or improving properties and providing housing to tenants. And the legal industry, you can lend to call legal operators, attorneys that are operating in contingency fee based type of representation. The individuals they're representing can't afford it. Just like if when you're providing housing to tenants, they can't afford to buy a home or a building to operate out of. So you're helping that. So with the attorneys, you can lend to them or invest in some form or another. There's a couple different ways it can be put together so that they can either acquire new business, new clients, what they call claimants on their docket, or help pay their rent as well as their operating expenses, court fees, filing fees, hourly rate of their team in order to get their cases across the finish line. And then they provide access to justice for those who otherwise couldn't afford it. And in exchange, they get a percent of the profits. Typically, the claimant gets 50, 60%. And the attorney in that case, who kind of put themselves out there and took a risk, a lot of effort, skin in the game, can participate in the remainder.
That's interesting. I would imagine that a lot of people listening to this, then, this is kind of intriguing. We get into real estate investing regarding like some additional benefits, including tax shelters and the like. Can you talk a little bit how this, all of your type of investing would help us beat the tax game, if you will?
Well, one thing that happens over time is that if you only invest in tax advantaged assets, you find yourself kind of in a over leveraged and kind of volatile, similar markets. The government subsidizes housing, food, and energy, right? Because they need people, they need the private sector to house, energize, and feed America. Well, both of those, all three of those go for a ride. In fact, right now with tariffs and through the international marketplace of the food industry, it's really difficult to turn a profit. We do interviews with all kinds of alt assets. Same thing with energy. It's a commodity. You can potentially get amazing tax advantages, but you're also going to go for a ride. And real estate, similar, right? So if you look at the pie charts of the wealthy, they don't stick with just tax advantage. In fact, only about 24, 25, 27%, if you look at the charts on our decks, of the middle class and the ultra wealthy is in real estate. Well, I listed energy. I listed energy as a good one, but you got to be careful because you can't get over leveraged in those ones that are so risky. They're even incentivized more than real estate. And for high income earners, like I was, you can certainly write off a lot, but you got to make sure it returns enough because that's not tax savings. That's tax deferment. And there's a recapture. So you got to make sure it performs in order to pay back and catch up with the tax dollar that you kicked down the road, right? So it can be powerful, but it's not something to overuse. So then what happens when you're like, okay, maybe I'm in the stock market, I'm in real estate, maybe I went into oil and gas because it's really attractive tax-wise. So where am I going to go now? Well, maybe I'll trade this time. I won't stick with just tax advantaged investments. In fact, if you look at the wealthy and the high income and ultra wealthy, they don't do that. I probably will feel more comfortable investing in something that won't rise and fall. I don't necessarily need the tax advantages because I know that once I put something there, if everything else falls apart, this thing is still going to be propped up, right? We call that non-correlation. And that allows you to sleep a little better at night. Now, there are some things you can do, even in litigation finance. Sometimes we can structure the contracts with attorneys as prepaid forwards as opposed to direct loans. And that allows the investments to show up as an asset. And then when they come back as a capital gain, it's better than ordinary income and it's still taxable, but it also allows some of the more savvy investors to play. If they have capital losses coming up, they can offset, capital gains and stuff. But that's not the point. The point isn't to be chasing, letting the tax tail wag the dog. The point is to just find true allocations that diversify your portfolio to build a secure foundation. That can't all be tax advantaged investments.
Just to remind everybody, head over to investwithpatrick.com to find the necessary resources, links there. Investwithpatrick.com. If you found some value in what we're talking about so far, do us a quick favor. Share this with one of your investor friends. If you're watching us on YouTube, give us a quick like and subscribe. So, Patrick, you mentioned tariffs. We are kind of in a weird economic flux right now. you kind of already mentioned a little bit about how your investment strategy kind of helps weather some of these storms, but could you dive into that just a little bit more and what, if you have any insight, what you think the outlook is here over the next few years?
This conversation can go on a really long time. And so let me try and only bring up like two or three thoughts that come immediately to mind that we should point out. The first one potentially is that even prior to the tariff battle, which I've been talking about since Donald Trump got reelected, heading into a tariff war, we had got hit by some record high interest rates climbing at a time when inflation was very volatile. And 11 out of the last 14 Fed rate hikes ended in a recession, which means probabilistically, this is a really important time. It's always important to focus on non correlated alternative investments to fortify your portfolio. But this especially, it's a very important time, more so compounded by a president that's threatening a tariff and trade war. Everybody should have seen this coming because history repeats itself. And here we are again, riding this wave of instability in a market that's sentiment driven. Meanwhile, my real estate holdings are cash flowing. And the big hole in Trump's big tariff plan, not knocking it or saying it's good or bad or ugly, but the big hole is services. America is one of the biggest exporter of services. These are software services, consulting services that are completely unaffected as of now by this tariff war, their products, right? And so the McKinseys and the Deloittes of the world are moving along like normal, doing their finance and accounting and legal services internationally unaffected, right? So there are industries which are simply insulated. They simply just don't need those inputs to have the product inputs for a CPA or an attorney to go to work, right? And a
Mhm.
trade war simply has left them unaffected, as far as I know. I've been around for a while and I watch the numbers, but my take is you can invest for the upside of downturns. And you can invest for stability and political unrest. We talk about that. The link, Invest with Patrick, is actually a link to Patrick's favorite alternative investments that anybody can go to and invest in today to build more stability in their portfolio. It's just a link to the most commonly asked question I have, which is a PDF that has my favorite alt investments anybody can invest with. But in Passive Investing Mastery, which is our educational platform, we're constantly educating on things like gold and silver and technology metals, strategic metals, ones that are in the news, and how you can invest for growth. Completely non-correlated inputs are resilient in these times, right? Which in political unrest is causing these things to go up. My gold portfolio is up 40%, right? Because I invested, because I knew it was necessary to do, even when it was the most popular thing. I knew it was the right allocation and the non-correlation. People like, price is too high. I'm like, no, it's not, because this is an allocation that stabilizes my portfolio, hedges me against dollar devaluating, right? Just like how strategic or technology or rare earth minerals tends to hedge against political unrest. Just like today, we're seeing huge growth in those kinds of investments.
You seem to be very measured when it comes to this kind of strategy. Like, did this just kind of come to you one day regarding this, or was this just the reality of real estate investing and the markets? Because to be honest with you, Patrick, I haven't heard a lot of people talking about this.
Well, if you look at the Tiger 21 allocations of the wealthy, right? Or you look at hedge funds, you look at sovereign funds, you look at diversified private equity funds, these kinds of investments in litigation finance, CPA firms are being gobbled up right now. One of the biggest hot topics in private equity, medical receivables. These are highly coveted medical industry investments, highly coveted investments from those who know how to build portfolios which sustain the test of time. And it was actually a long time before I was even able to offer litigation finance, because I tried a couple of times with one of my buddy who wrote the Alternative Investing Almanac. He wasn't able to get an attorney to work with us. Then another guy I knew, David Gooseman, who was working for private equity, and we were dueling on real estate deals. He told me he was doing litigation finance as well as medical receivables and private credit deals and all kinds of stuff. I tried to get in with him at the time, and he wasn't doing anything less than $20 million checks. But eventually he hung up his hat and called me up and said, "Hey, let's do one and offer it to accredited investors." These are not unknown, they're just lesser known. These are not new, they're novel, but they're known by a fewer number of people because they're not popularized by the gurus in the space. People aren't selling coaching programs on how to fund attorneys, on how to do medical receivables. Maybe there's a little more sophistication in the structures. Fundamentally, lending in real estate is almost identical to lending into attorneys. It's just an asset-backed lending strategy, just like lending to anything else. However, it is the process by which you just need to take steps into learning and getting more comfortable. To your point, at Passive Investing Mastery, we have an alternative investing mastery series. I wanted to be part of the solution. The financial IQ of American alts is horribly, cripply bad. And unfortunately, we're seeing super out of balance portfolios all the time, but nobody knows. Like, I was working with some of the smartest people I've ever met in my life, some of the coolest products and some of the coolest companies on the planet. None of them had any idea any of this stuff exists, right? So I started saying, like, let's just do some webinars and I'll start talking about different alternatives that exist. And I showed everybody my hand. These are the ones. And that's why I created that PDF you can download and invest with Patrick. It went over real well. So we just created a mastery series. And now every 2 weeks, bi-weekly, we bring in 2 to 3 panelists in a completely different alternative strategy. And we dig in for 45 minutes, and then we dig in for another half hour in Q&A live. And we just go deep dive into different alternatives every 2 weeks. Because people, they don't know. Until somebody gets out there and does a blue ocean approach and educates on it. We've done gold mining. We've done blockchain investing. We've done Forex. We've done parking lots. We've done affordable housing. We've done mobile home, manufactured housing. We've done how to buy a plane for cash flow, how to invest in pilot education. We've done just about every imaginable kind of alt asset. And if there's one we haven't done, let me know. How to use AI in investments. And we've had one on asset protection and retirement account, tax efficient investing. And so we're trying to equip everybody with at least the knowledge. On my website, we have all these replays of just probably 50 at this point, completely different alt assets presented by people who are actually doing these things, as well as strategies. You'll find something that resonates with you. You just got to get in there and look and find something and then begin to step into the space.
Before we jump into the rapid fire questions and close out this episode, I'm curious on one last thing. A lot of people are kind of sitting on the sidelines right now, whether it's analysis paralysis or just downright fear of the market. What would you say to them?
Well, so I'd say you're missing it because, and it's not your fault. You just simply haven't been introduced to the strategies where you can win from downturns. So I lost everything in 2009 and 10, making really bad bet in pre-development, super speculative, snot-nosed engineer, was upside down, lost my ass, raked over the coals, learned a lot about how not to invest. But now we just saw basically the 2009 and 10 of the commercial real estate market. It was the delinquencies that killed, the eviction ban and the delinquencies that killed, plus the inflation of material costs and payroll costs that wrecked people's operating budgets. In addition to the fact that insurance skyrocketed 20, 30%, if not doubling and tripling or disappearing in some markets, all at the same time, and interest rates skyrocketing with debt, with short-term debt coming due at a time when all of their business plans are delayed. Banks are on the sidelines. There's a ton of distress. It's probably the best buying opportunity, not in office or really maybe in some multifamily opportunities, but a lot in industrial right now with some of the resurgence that we're seeing post-COVID. Right now, the reshoring and industrial manufacturing and warehousing, as well as some retail centers and some target markets. We're seeing some incredible opportunities to both lend and buy. And that's why we have a lending fund, income, predictable income, and an acquisitions fund for great growth. Both opportunistic, specifically winning from this downturn in commercial real estate, as well as investments which simply just don't care what's going on. So you can invest and litigation finance right now, and it doesn't even matter. They're just chunking away and getting paid in that industry. And you can follow the world famous judicial process that we have here and jump on board and prop these guys up and help them provide access to justice along the way.
Hmm. So you continue to say passive investing mastery. If somebody reached out to you and your team, like what could they expect? How does this work?
Well, since I became full-time investor, I keep my calendar right there on my website. If you book a time, I will join the call. I'll contribute, get you pointed in the right direction as best I can. If we're a stop along that way and you're interested in our investments, they're right there on the homepage. That's great. If not, I'm one of the few people that have exposure to dozens of different alternatives, and we show them on our website on the replays of our mastery series. So I can get you pointed and fit with something else, right? I can't give investment advice, but yeah, and I've had quite a few meandering experiences. I can relate to you probably because you're probably a hardworking professional trying to navigate this, and it's a little intimidating, right? I've been there and done it. So I can help and get you pointed in the right direction. If you're looking to learn, jump into the mastery series. Like that, take a passive step at least once a day. Listen to a podcast, TED Talk, an audiobook while you're going about your life. One passive step a day. Mastery series is great for that. Our replays are great for that because we go and what'll happen is you get more and more and more programmed every day. What you're going to find out is that these are the same concepts just applied to different industries, right? You're going to find out that, oh, this is simple. It's the same stuff with liens and everything, loan to value and collateral and, and skin in the game and all that stuff. It's very similar. So once you get in there and start learning, take one passive step a day and then do one active step a week. That's set up a call with me, attend somebody else's deal webinar or ours, or go to a meetup and actually get in front of these people and start building your tribe because humans they simply don't wander into the desert on their own. They don't go into the forest on their own. We're not built that way. Simply not wired to do that. And so it takes time for you to find that tribe. And it's not that hard to do. I've created meetup groups before and I've attended meetup groups. Some of the people that I met when I first started my journey, they're still some of my best friends today. And so just get in there and start surrounding yourself with those people and start consuming the content passively and then just take action. Make a goal for yourself to do an investment. 90 days, make a goal to take action and then just begin the journey with somebody out there.
Well, that's a great way to transition into the next few questions. But Patrick, this has just been very interesting. I really appreciate you giving us some time here tonight. Before we jump into the rapid fire questions and close out this episode, is there a question or concept you wish we would have hit on?
I think we covered it. Draw the pie chart of how much you have invested in each pie and label those. And then do a table of risk, like how at risk do you think those are from 0 to 10, and then label that. And then feel how comfortable you are with your portfolio. This thing that somehow is bringing you security, your IRA, your 401k, maybe your single family rental or whatever it is. And just think, well, what if you had another piece that was recession resilient and non-correlated to it? How would that make you feel? The fear of stepping out into something new is worth it because going to bed with anxiety every night, hoping for, or wishing that the market doesn't collapse, that's a fool's errand, right? The only true way to that peace at night, that financial security, is through a truly diversified portfolio. And that's what I ask people to do is take that time and do that personal journey.
Again, it's investwithpatrick.com. And we had mentioned that Patrick has a book available as well. So Patrick, where can they get a copy of your book?
Yeah, so it's just kind of like my give back. I did this with a couple other guys. This is me here. There's a Navy SEAL right there. Bill Cullen, lead guitar of Def Leppard. He tells his full story. Actual rock star. There's, Kevin Eastman, Tom Ziegler, Dennis Whaley, Brian Tracy did the Ford. This book, just the process of making this book and meeting and having fun with these guys was just so fun. And the outcome, we've just gotten such good feedback and it did make a bestseller. I tell my whole story as a hardworking professional, losing it all, making it back into single family, trade into larger apartments, getting into energy, and then all these other alts and passive investing mastery. And I tell my whole story. If it's an inspiration, if any of these stories are inspiration to you, that's enough for me. We give it away. I sign them, send them out. The secret link is passiveinvestingmastery.com/book. Passiveinvestingmastery.com/book. But we don't send it to randoms. So you need to make sure you put in the REI network here into the promo code. You just fill it out and you don't put anything in there. We're not going to send it. But you can also download the ebook. So you choose download the ebook or download the ebook and get a hard copy. And if that helps to get you along your journey, then I've done my part. And if we're a stop along the way and you want to have a conversation, I love to entertain that.
Well, I appreciate you giving that out. And we're going to jump into the rapid fire questions, and we're going to try to get this done here now in the next few minutes. Really appreciate that, Patrick. First is, what lie do real estate investors often tell themselves?
I can do it myself and keep control over it and be successful. Because, I did that before, and turns out I'm a hardworking professional, really good at one thing. You have to trade your time from your family hobbies and what you care about most to be as good at another thing. But that other thing isn't good enough. You need to be allocated in lots of different things to reach your end game, to reach your goal. So it's about partnering. Can't do it all by yourself.
If you could go back in time and give your younger self a piece of advice, what would it be?
Say, don't go all in one. Yeah, so I think I played the game of getting comfortable in one thing and then getting way over indexed in that one thing until I got comfortable in one thing and got way over indexed in that thing. I didn't learn early enough to partner and early enough to diversify. And I wish that I had had that education at a younger age.
You have a book recommendation, or what are you reading right now?
So I'm reading a bunch of books on how to raise a 2-year-old. And so we got a 2-year-old and he's just awesome. But, business wise, I think EOS, Traction, Gino Wickman, that has been an incredible book for us. And, rallying our team together to put together their rocks. And I think that overall, I think any business owner that's real serious should be taking a look at that.
And finally, what single strategy or tool have you implemented that has had the biggest time-saving impact to you or your business?
Outsourcing through ACE has been an incredible thing. The use of AI has been a really good help in our organization. And EOS has been really good. I'm not sure which one would be potentially the winner because they all kind of mean different things.
Sure. Well, Patrick, I really appreciate the insight and your time here today. One last time, you can learn what Patrick is up to, investwithpatrick.com. Take advantage of that free book offer. Use that code REI Mastermind. I'm going to have that as clickable links in the show notes. But hope you'll consider coming back again sometime. That was great meeting you.
Love to do it. Thanks for having me.